So we're going to talk about return on investment, return on sustainability investment, return on ESG investment. I I kind of use ESG and sustainability interchangeably here. I know they're not exactly the same, but bear with me. I lead sustainability for API Group. API Group is a family of companies in the building services, construction services industry. I've got a brief, very busy slide here, but it kind of just tells you here's a building and here's all the things we do in the building. From fire protection, which is life safety, a big, big part of what we do, a big part of our business, HVAC, mechanical, plumbing, electrical, some pipeline work, elevators, escalators. So think 40 operating companies all kind of doing their own thing, but a part of API Group. I was visiting two of them down here yesterday, today, and the day before. Elevated Elevator, operating in Orlando, International Fire Protection, Gruno Fire Protection, just a lot of individual companies. So that's what we do. I think about fire protection. Has a big, impact on resilience in and of itself. How do we protect our assets? And then HVAC and mechanical, how are we using the building, and operating it responsibly? So I'm gonna kind of bring us down a little bit and talk about our shared reality, what we're all dealing with right now. Um, Limited or dwindling resources times are a lot different than they were when I got hired in 2023. It was the regulatory boom and everybody had to get ready, and I had cash in my budget and all the good things, and now not so much. Um, Reporting proliferation and uncertainty, and then regulatory uncertainty. So, oh yeah, I got to report all this stuff. Okay, what exactly do I have to report? Give me the exactly what I have to report. Oh wait, and I don't have to report that anymore. Not until when? That is hitting us pretty hard. I'll tell you. We purchased a software in 2023 for 3 years, 95 grand a year. We will not use it before we actually have to use it to report. It's a mess. And then competing priorities. We're all battling for resources. Everybody is looking for that extra dollar to do the work. Has sustainability or ESG kind of stayed where it was? Is it really important to the business? We get conflicting reactions. We've seen what happened with Target and other companies that kind of reposition themselves on DEI and things like that. So what's really important? I'll tell you what's really important. Value, right? I'm not sure, when I got into this, it was more of a, hey, sustainability, it's the right thing to do. Yeah, we can find some efficiencies. It's a good story. But really now, everything that I am asked, I have to put a dollar to. I have to be able to say, this is good for the business. Is this good for the business? That is the question I've heard from my CFO, my general counsel. Is this good for the business? Yes, it is. And especially coming in the way I came in, we had this traditional mindset. ESG is regulatory reporting, customer questionnaires. You get them, you answer the questions. Anybody get customer questionnaires before you do business with them? Now, when you answer them and you don't answer them very well, do you still get the business? No? See that right. So we still get the business. And so it's like, why did we go through this process? There's no real impact to the questionnaire. They get ignored, but that's changing. That's changing. Of course, investor expectations, that can be a herring too. My investor asks me things, but nothing comes of it. We still, we don't lose them. So really trying to pay attention to that. We all do our greenhouse gas accounting, supplier codes, really basic stuff. But I think we all know this, good ESG governance reduces risk. Regulatory penalties go down, reputational damage. We've seen that hit people. Customer disqualification. It happens. I know it happens. I've been there. But it's really market specific. What do you do? What business are you in? Who are your customers? Supply chain disruption, and insurance and financing. Can we get access to capital? So compliance, I think we all agree, it's the floor, it's not the ceiling. Once the foundation is in place, ESG can become a source of measurable business value, and I completely agree. That's pretty much the thesis of what we're talking about. So as we watch this market, go through its ups and downs, the trend is up, and it's shifting. So the next generation of sustainability leadership is making the connection to aspects of the business. So where can sustainability create cost savings? Where can it bring in new revenue? Where can it protect existing revenue? That's something we are actually dealing with on the international side of our business. Is now customers are saying, you're not as mature, we can't do business with you anymore, especially governments. Risk reduction, productivity, getting the best out of our people, keeping our people, capital access, and brand and customer preference. We want to remain the attractive brand partner that our customers want to do business with because we share their values and we're accretive to their goals. We help support what they're trying to accomplish. But all of that takes some serious integration. And I don't know, I'm gonna ask another question. Who here feels like they're in a silo? They're that sustainability team over there that doesn't get in front of the right people, doesn't get to have the conversation. That is the big opportunity, I think, for us. But we've got some homework to do before I think we can have that great conversation. So if we look at that path to that level of maturity, we start with compliance. We report what is required. We do what's required. We issue our TRIR. We put the thing on the wall. Whatever other environmental compliance reports we have to do, we do that. Then we get into risk management. Okay, yeah, I bring in my ISO systems that help me manage risk for environmental risk, safety risk. We're moving on up the ladder. Efficiency. Okay, now we're looking for how we can do more with less. Where can we get more efficient, find savings, reduce resource consumption? Then we see, oh no, what we're doing can actually help us get better, help us grow, draw in more customers. We start the sustainability reporting, the voluntary reporting. We start telling the story, spreading the message. When we really get all the way to the top, we're thinking about sustainability truly embedded in the organization as a competitive advantage, as a differentiator. And I don't know if any of you have read Jim Collins' Good to Great. We got one. And when I tell you, there you go, the flywheel, that's when you get the momentum building. I highly recommend. What I'm talking about here is really getting engaged with the business leaders and other functions of your organization. These are the types of books they're reading. I love Net Positive and Andrew Winston, but we got to start to get engaged on the books that the business leaders are reading so we can understand how to connect with them. But you really do get that flywheel moving. You get the momentum driving the business forward. You're focusing your operations and your activities and your service areas in the right place that are embedding sustainability. I think all of us in here, I venture to say, are true believers. Like, we believe this is the right thing to do. We're exiting this area of aspirational ESG where we set the goal because we feel it's the right thing to goal. It's the right thing to do. It's the right goal to set. We need to do this, but it's not landing anymore. And I think we kind of have to acknowledge that. We can't, the net zero target, yes, you can have the mindset or the disposition that, hey, it's the right thing to do. Set the goal that needs to be met and then figure out how to get there on the way. Or when you're dealing with a lot of highly technical engineers and finance people and very risk averse people arguing, well, let's set the goal we have some feasible way of achieving and then grow from there. And I think there's credence to both perspectives, but I think this is one that is slowly starting to drift. And that's where we get operational ESG. That's when we can really put the dollars to what we're trying to accomplish to show not only are we doing the good, but we're also driving the business. We're creating profitability as well. And so when we're shifting kind of away from this aspirational ESG that leaves a lot of questions unanswered, how we get there, we start asking the right questions of what systems change, what risks did, declined, what efficiencies have we created, what costs were avoided, what resilience increased. So in order to have these better conversations with more integrated group of operations leaders in your business, we've got to step up our fluency in their way of speaking, in their terminology. So we have to understand finance if I'm going to go talk to the CFO. We got to understand asset management if I'm going to go talk to the facilities leaders in the building. Procurement, that this is that really is a tough one. Are we buying the right raw materials from the right companies? Do they understand the risk? Insurance, our operations teams, how are we actually doing the work? How are we actually delivering the service? Risk and resilience. Do we understand what's down the line? What can hit us? Instead of talking about ESG and our categories and things that are esoteric to us, and we're trying to bring them along and preach and teach, we need to articulate our message in a way that addresses revenue protection, cost avoidance, risk mitigation, asset longevity, workforce productivity. If I'm connecting those dots, then they're listening. I've seen it. I've seen it, eyes light up in conversations when I've positioned what I'm trying to do, ostensibly for that function, but within the lens of sustainability. So again, we really have to reframe the conversation around sustainability to where they are and what they are accountable for. Understanding that they have goals and objectives that have come down, and how can we help them achieve those? So we've all seen this before. We've heard people, planet, profit, right? And I've kind of I've repositioned it just a little bit because I want them to understand that, hey, we can't do any of this if we're not a profitable company. We have to ensure that what we're trying to accomplish is actually connected to and driving performance against the business, the actual business metrics and goals. So communicate the financial ROI with the same rigor that we do people and planet. And I think a lot of times we communicate, hey, this will create a benefit in a certain area, but we don't actually get to the point of quantifying it, of delivering something that they can say, oh, okay, all right, this is going to add $3 million of EBITDA, or it'll add, we might gain another million in revenue because we did XYZ. So you really want to make sure we're connecting those dots to the business goals. So for my company, we have what we call 16-60-10. 16% EBITDA margin, 10 billion in revenue, and 60% service mix between whether we do contract, new installation, or service mix of inspection, service, and maintenance. And so everything that I try to communicate from a sustainability perspective we should do, I have to correlate it to how it's going to help that branch or that operating company achieve one of those targets. There's another one, 3 billion in cash flow, but it doesn't sound as good when you add that one in, so they don't say it. So let's look at the value drivers really quickly. Just things that we think about. We talk about energy efficiency from an operational excellence perspective, lower utility costs, but then how do you measure it? Like, we get to this is the connection, but how are we actually measuring it on the back end to say, hey, yes, this actually happened. It's delivering on what we expected. Revenue growth and customer retention, same thing. We have these ideas, we make the connection, but how do we measure it? No, we're not going to go through all of them, but there's a couple here. Those are two. Workforce and culture, lower turnover. I say it all the time, and I'm working with my HR, my people lead, to come up with a way, how can we measure that? And then capital and insurance. So what are the steps? Start with your business priorities. Ask the right questions. And where are costs increasing? What are customers asking for? Where are we exposed to risks? Where can we operate more efficiently? What can we differentiate? Where can we differentiate? What are the financial drivers? Well, hey, cost reduction, revenue growth, risk avoidance. Let's paint those connections. Productivity improvement, capital efficiency, asset optimization, customer alignment, huge. And then define the baseline. Where are we now relative to these areas? And then measure the financial and non-financial outcomes. Dollars saved, easy, emissions reduced, waste avoided, all packaged into one neat representation. I have a form that we use. I'm going to show you in a second. And then communicate it, share it. Create a dashboard, show, hey, this is where sustainability is connecting to all of our functions and delivering value for the business, very specifically relative to those goals. And this is the one we use. You can't see it, but it's really just saying, hey, what is the project? What's the value driver? Revenue, margin, cash flow. Nature of the project, how we're quantifying it, how we're going to actually measure it. Define the sustainability impact. It could be people, environment. And then quantify the benefit. What's the ROI? What's the payback period? All this gets rolled up kind of automatically into a driver. Oh, sorry. So almost done. So integrated sustainability, it can't just sit with us. Got to get connected. It requires cross-functional approach. It's got to be co-generative and collaborative. So we're working together. I'm not just putting stuff on them. We're working together to come up with ideas that make sense. These are the areas that we regularly engage. And lastly, the future sustainability and ESG and business credibility. You had something on your slide that was like, we're the last place where credibility in this world exists. And I think adding some of this acumen and this ability to connect with other business leaders is really going to add to that. So we must measure connect our sustainability to ROI, to those outcomes that drive performance. The future leaders in sustainability will not be just compliance owners, report writers, et cetera. They're going to be business strategists, value creators, partners, ROI translators, and drivers of resilience, growth, and competitive advantage. So thank you. Sorry if I ran over a little bit.
Great. Thank you so much, Chris. Really